ratios and financial analysis. Then follows these 8 pages, complete statement as related to financial ratios and its analysis, along with a project at a glance. It is as related to 1. Profitability, 2. Working capital, 3. DSCR, leverage, interest coverage, assets coverage, ROE, ROCE, etc. 4. Movement of net worth, adjusted net worth and all public finance ratios. 5. BEP analysis. 6. Pre-tax and post-tax IRR workings. 7. Sensitivity analysis. And 8. Project at a glance. Now referring in detail. Profitability. This is a full page analysis of profitability as to its profit structure, cost composition, etc. both in terms of respective amount and as percentage to net sales value. It will be all along with the actuals of last 3 years moving into the projections. This would be quite helpful in deciding into reasonability and acceptability of profitability. Working capital analysis as along with actuals of last 3 years moving into the projections. One full-fledged detailed analysis of working capital, giving all through structure in terms of days and months for all types of inventories, receivables and creditors. All method permissible finance as method 1, method 2, turnover and even DP method. Composition pattern structure of working capital and current ratio as including installments and current ratio as excluding installments. Your working capital assessment is getting fully decided here in this main parent package and you are unable to link up with CMA data. Your CMA data will get prepared all on its own without any data input for the same. Third ratio analysis statement is related to DSCR, leverage, interest coverage, assets coverage, ROE, ROCE, etc. All as along with actual of last 3 years moving into estimates and projections. DSCR, item wise and how made up, funds available to service debts and debt service obligations as each year wise. Then DSCR in both the way, gross DSCR and net DSCR. It lets you know the individual DSCR of the year, cumulative DSCR, that how it moves ahead year to year, and then overall DSCR. These year-to-year cumulative DSCR would be an important guiding factor and helpful in its improving, adjusting, and having an analytical look to the same. It will be so detailed at length for both gross DSCR and net DSCR. Leverage. Here in the lower part, you are made known of leverage as debt equity, dual TNW, as non-quasi, quasi, adjusted, etc. as that of actuals of last 3 years and as it moves ahead in the projections. Interest coverage. You get interest coverage ratio in all 3 ways as PBDI to interest charges as percentage to net sales, interest charges as percentage to total cost of sales, then P&L as related to balance sheet in terms of assets turnover, ROE, RONW, etc. Thus, a very crystal clear and in-depth analytical view there too. BEP could be in terms as reference to production or as reference to net sales. You could decide on to variability structure for each element and whether miscellaneous income to be considered in BEP working or not, or to what extent. Moving to output report, you are getting a full-fledged and detailed BEP report stating BEP, gas BEP as percentage to installed capacity and
Also year-wise status of BEP and margin of safety. All these enable you to structure and get a very correct view and picture on BEP. IRR. As related to IRR input, it could be worked out till repayment continues or a specified number of years. You could also decide into whether to add back interest charges or not, etc. Very importantly, you are facilitated to consider the residual value of each asset separately. The year for residual value and its residual value, either a depreciated value as per Companies Act, depreciated value as per IT Act, or a specified amount thereto. You could even include therein intangible assets like goodwill, brand, patent, trademark, copyright, etc. With all these together, you are effectively enabled to get the proper and effective IRR, reflecting the correct picture thereto, either as a project IRR or equity IRR.
It provides for 4 pages detailed sensitivity analysis, with user-defined 4 percentages value as positive and negative both. Sensitivity is not just restricted to net sales and PBT, but it is very much extended sensitivity analysis as related to the resultant PAT, resultant DSCR, resultant BEP, cash BEP, resultant ROE, RONW, etc. You could observe that with 2% increase in sale price, its resultant DSCR stands at 2.66, and with decrease, it works out to 2.11, as against the overall gross DSCR of 2.33. Project at a glance. Project at a glance, as a summarized view, it is a nice consolidated statement of all financial ratios and analyses, all as one page view, and enabling you to read all ratios in conjunction to one another, ensuring no overlap or out of sight.